Any investor looking beyond the traditional capital markets of the developed world will know that frontier markets have, in 2013, outperformed the emerging markets, the likes of the BRICS and others. A quick look at the 2013 chart year to date shows that frontier markets are up around 15 to 16% compared to the MSCI Emerging Markets Index, which is down around 2%. So, the big question, is there still time to invest? Well, first, what are frontier markets? Without wanting to get into semantics, they are whatever the MSCI says they are. The MSCI Frontier Index is made up of company stocks from a very diverse set of countries, encompassing Argentina to Vietnam, with over 20 other countries in between. So what has driven the outperformance of frontier markets? Why are they up so much compared to emerging markets, which include the BRICS and other countries such as Mexico and Indonesia?
The key driver of the frontier market outperformance this year has definitely been the inflows. There's a great number of funds that have been set up over the last 12 to 18 months. I think investors have recognised that the move into frontier that happened in 06, 07 was the end of the Greenspan kind of tide of liquidity. People didn't think it was going to last. I think people, since the global financial crisis, having seen how well frontier came out of the global financial crisis, believe in it as an asset class. And money's been flowing in as a result. And that's kept equity prices up.
So is frontier investing for everyone? Is it becoming more mainstream or at least less exotic?
Frontier markets and mainstream I don't hear in the sentence together that often. It's definitely not mainstream yet, but they're much more becoming an important asset class to have as part of your emerging market strategy.
So what's the approach? How should investors regard frontier markets when looking at their portfolio? Should liquidity be a worry?
A lot of frontier investors are really long-term investors. Because of the smaller market cap and because of the smaller market size and liquidity of these markets, we think investors are taking long-term decisions when it comes to frontier markets, because it's not easy to flip your portfolio when it comes to frontier markets relative to emerging markets. For example, the frontier markets market cap to GDP ratio is around 30%, whereas for emerging market economies it's around 55%.
There is an issue, of course, with liquidity. Some markets, the liquidity is very limited, and in essence it makes it almost impossible for us to invest. So whilst we say our opportunity set is 30 plus countries, in practice it's probably about 15 to 20 countries we can really invest in.
So if you are looking to invest, what indicators should you be looking out for? Can the statistics that investors would usually use be relied on, if they're even available?
The trouble with statistics in any country has been an issue. Now you can go into central bank websites in Sub-Sahara, for example, and you can download a load of data in Excel. It's made life easier. How good's that data? I don't think it's great. The IMF doesn't think it's great. So what do? You look at micro data. You look at telephone kind of sales, telecoms, as a great indicator of much greater wealth in Africa than anyone realised. You look at breweries, for example, or consumer goods. Try and combine the micro and the macro to see if these two are roughly fitting. And when they do, all good. When they don't, you have to start asking questions.
So have investors missed the rally? Is there still time to invest? Looking at the performance of the two indices over the last 5 years, emerging markets have had a much bumpier ride, but are up over 100%. Frontier markets in that time are actually down a bit. From that perspective, the frontier markets take on a very different complexion. But what about valuations?
From a valuation standpoint, the MSCI Frontier Index is now trading at a price-earnings ratio of around 12 times. The long-term average is around 13.5 times. So it's trading below its long-term average. And if you believe that the world is gradually getting better, as the IMF thinks so, in that GDP growth is likely to accelerate next year, then there's potential for further upside re-rating of the valuations. So there is further scope for further upside performance.
So what considerations should potential frontier investors have in mind? Well, one is time frame. 2013 has been a very good year for frontier markets, as we've seen, but over 5 years, perhaps not. Secondly, there's also liquidity. Are you prepared to be a long-only investor? It's sometimes hard to get your money out of frontier markets. It's not a game which you can flip quickly. Another question is whether you want to be a top-down or a bottom-up investor. Do you look at companies first and then put them into their country context, or do you look at countries and their macro considerations first? If it is looking at the macro indicators, What data can you trust? So, are frontier markets a buy? A cautious one, perhaps. There are risks and considerations that may put some investors off, but the high rates of growth, both on a company and country level, make them very tempting.